Hey guys, we're back for week 6 of the 2022 M1 Finance Battle, where we compare 4 different categories or sectors: covered calls, S&P 500 ETFs, REITs, and NASDAQ 100 ETFs. We started the week at 901.35 cents, where at the start of the year we were at 1,000. The week went up a little bit, but then we had a decline here on Friday, and here is what the graph looks like on our Google Sheets. The REIT category fell 2.5% for the week. Covered calls fell 0.74% for the week. The S&P 500 ETFs fell 1.8% for the week, and the NASDAQ 100 ETFs fell 3.89% for the week. The entire portfolio fell 2.17% for the week to $884.15. Last week, it was looking like the stock market was going to start to go up, but every single one of the categories continued to decline. So as we saw, the markets started to go up, but due to inflation fears and the possibility of Russia invading Ukraine, it spooked the market on Friday. The markets tumbled, where the S&P tumbled 1.9% on Friday, the Dow Jones tumbled 1.4%, and the NASDAQ tumbled 2.7%. only on Friday. The escalating geopolitical tension was the first problem on Friday. Both the UK and the US suggested that Russia could soon invade Ukraine and advised their citizens to leave the country. The United Kingdom and the US advised their citizens to leave the country of Ukraine. Geopolitical tension isn't good, but it doesn't have to do permanent damage to the stock market. The peak to trough move in the S&P 500 when Russia annexed Crimea in 2014 was about 2%, yet the S&P 500 rose 11% for all of 2014. Also, combined with the news of Russia invading Ukraine and these countries asking their citizens to leave the country, a COVID-related issue was the second problem for the decline on Friday. The Food and Drug Administration said it would delay to approve COVID vaccines for children under 5. That might seem to be a minor setback with Omicron infections falling, but it could be a bigger deal than even Russia. Any sentence that involves the word FDA, more time, delay, vaccines, and children will shake confidence in the market. So let's go over to the spreadsheet and see what we have and check out how our individual funds performed. Let's check out the weekly tracker. Here, we start up here at the top in the REIT category. We have the top REIT being Realty Income Corp this week at $46.96, and Digital Realty Trust DLR being $38.45. The overall value of the REIT section is $216.94, falling about $6 compared to last week. We come down to the red section, the covered calls ETFs, and PBP has taken the lead again, where PBP and Devo seem to have very similar covered call writing strategies to be able to stay in front. PBP is at $48.35, with the lowest covered call this week being QYLD at $45.77. The whole overall section or category of covered call ETFs lost about $1 to $2 this week, sitting at $2.37. Down in the S&P 500 ETF category, IVV, SPLG, and SPY are all sitting around the same value of $46, and on the graph you see they are tracking very closely, with VOOV again being the highest valued fund in the S&P 500 category, and VOOG being the lowest valued fund in this category. Overall, we went from $234 down to $230, a slide of about $4 to $5 for the S&P 500 ETFs. Down here, last but not least, in the NASDAQ 100 sector, QQJ actually took the lead, with the lowest fund being the triple leveraged fund TQQQ at $31.94. And over on the graph, you can see that QQJ in the red took the lead compared to the rest of the funds, where QQM and QQQ were in a solid lead the entire year. But now QQJ is in the lead. We had a decline of close to $8 from $207 down to $199. And this is the first time the entire year where a group or sector lost or dropped below the $200 figure, where each sector we started with $250 and each fund started with $50. So that is it for week 6. I'll see you next week.